Hello, Tesla is back in the news following Battery Day 2020. The analyst reaction is mixed. The stock is down considerably on the day. The last I checked, it was down 5 to 6%. Other analysts are saying because it's down, this is a tremendous opportunity to get in on a dip. What I wanted to do is go back 20 plus years ago and see if we can't learn some lessons from the past, specifically from Sun Microsystems. So 20 years ago, Sun Microsystems was trading at 10 times revenue, along with a large percentage of the US stocks. Now, the CEO said, look, this doesn't make any sense. In order for this price to make sense, I need to pay you 100% of my revenues for 10 straight years. Now, this assumes that other shareholders are allowing me to pay out that much money. It also is going to assume that because these are revenues, I have zero cost of goods sold, I have zero expenses, I don't even have to pay taxes, and you as an investor aren't going to pay taxes on your dividend, even though that is technically illegal. It assumes that when I go to this no expenses, no costs, zero R&D over the next 10 years, that I'm actually going to be able to maintain my current revenues over this period of time. He said, this is crazy, but if you're willing to pay me that much for these stocks, please be my guest. Right now we have Tesla. Tesla, even with today's sell-off, is trading at over 15 times of revenue. So in order for this to make sense, what Tesla's going to need to do is they're going to have to pay you 150% of the revenues every year for the next 10 years in dividends. Again, we're going to assume no cost of goods sold. We're going to assume no expenses. We're going to assume they don't have to make any payments on their rather large debt. I think it's somewhere around $8 billion, that they're property, plant, and equipment growth that we've seen that has facilitated their ability to grow output is no longer there. We're going to assume that they pay no taxes, that again, that all these dividends you receive, you don't have to pay taxes on them. And we're going to assume again with zero R&D expenditures, no capital expenditures, which have been high for Tesla over the next 10 years, that they're going to be able to maintain these current revenues. It also assumes that they're going to be able to continue to incur negative working capital. What they've been able to do recently is put on the back burner some of the payments they need to make. So they've kind of extended their payment terms so that they can pay later, but that's also helped their cash flow tremendously. Now, just to go back again now, 20 years ago, what happened after Sun Microsystem said this? They ended up losing 98% of their share value over the next 8 years, as did many other companies that were trading at these ludicrous multiples. What will follow with Tesla, I really don't know. Especially don't know what's going to happen with the company. I hope they survive. I like what they're doing. I personally would love to have a Model S, but what I can guarantee is that the stock over a long period of time, I don't know the next year, 2 years, 3 years, 4 years, but let's say over the next 10 to 15 years, it is, I guarantee, going to be an underperforming stock versus the market. Now, right now, Elon Musk has more, they're just the 18% of the shares that he owns are worth more than all of GM and all of Ford combined, which means Tesla is roughly worth 5 times what Ford and GM are combined. We can see here that Ford and GM have much more revenues than Tesla does. So this valuation doesn't make sense, even considering growth. And I think, oh yeah, Brian, Tesla's going to grow, but are they really going to grow enough to justify at 15 times revenue valuation? I argue they won't. This is a harder growth trajectory that they're on now as they get bigger. I'm also going to point out here, maybe this helps a little bit. This is old, by the way. This is from the beginning of this year. This has grown even worse. Ford and GM's market cap has gone down from here, and Tesla's has gone up, which kind of goes back to my saying that Elon, with his 18%, has more wealth or more market cap worth than GM and Ford combined, which is absolutely crazy considering the revenues that we saw on the previous chart. I believe that this is collective delusion of the market for Tesla. Again, I like the company. I like what they're trying to do. I would like to have a Model S, but this is a case when popularity, check out this video here. I had a long discussion with Robert Ibsen about popularity, where we talk about how the fact that popular companies like Tesla underperform going forward. So right now, our expected returns for Tesla are much lower than the rest of the market. Thanks so much for listening.